Hey everybody, it's Dan Ferris here, the editor of Extreme Value, published by Stansberry Research. And if you want to know more about that, you can go to www.stansberryresearch.com. Today's video is a little bit of bragging and a little bit of talking about risk. So let's do the bragging first. Last September, just about a year ago, I gave a presentation in Las Vegas, which is available here on the Extreme Value YouTube channel. And I warned people about all kinds of things. I told them that bonds were the biggest bubble in history. And I told them that people shorting the VIX volatility index through ETFs were going to get blown up. And I also told them that stocks like Facebook, Google, and other high-flying tech names were vulnerable to sharp corrections for a number of reasons. Their business models were getting them into difficult situations, and the management is clueless about that. So what's happened today, a year later? Just looking at this a year later now, and of course the VIX ETF, the XIV, blew up in February. It was down 80% in a few minutes. That was one of the big points I was trying to make last September too. Risk happens fast. In fact, we have a video called Risk Happens Fast, which probably touches on some of these same things. You know, my tune never changes, folks. Sorry about that. And that's what you don't realize. The risk is always there, even when everyone's in love with the stock or bond or ETF or whatever it is that I'm saying is so risky. The risk is still always there, even when people think they're getting great returns, and indeed appear to be getting great returns. They're getting great returns by taking more risk than they understand, is the point I'm consistently trying to make with these situations. And you know, so the VIX blew up in February. I mean, the short VIX ETF, XIV, blew up in February, and you know, bond yields have, of course, come up. I mean, that was a decent call overall. And I just thought these aren't macro calls, by the way. I'm just looking, we're pricing risk here. That's what value investors do. We price risk. So when you see, you know, I think it was like every Swiss bond of 10 years maturity and less was negative yielding. And I think every German and Japanese from 5 years down was negative yielding. And I thought that was really excessive. And you could see the effects in the greater bond market as well. European junk at 2% yields. Just really crazy stuff in the bond market. And there was a Deutsche Bank survey. It was actually Deutsche Bank price data going back to something like 1800. And, you know, where 0 was the cheapest it had ever been, and 100 was the most expensive. It was finally at 100 last year. So, you know, it wasn't, it was kind of a typical value investor warning of caution in the bond market. It turned out pretty well. And again, risk happens fast there too. You know, I cited Toys R Us bonds, and later on I think we mentioned Steinhoff and one other company, you know, where the bonds just got crushed, you know, fairly quickly, maybe in a day or two or a month or two or something, and people thought they were taking a lot less risk than they really were, and we saw the risk beforehand and were kind of alarmed about it. And today, what do we see? Today we see Facebook is pushing down towards 160. I think it's 161 or 162 as I'm talking to you here, and you know, having been at 190 and in the 170s when I started warning about it, you know, I thought it was, it's a typical situation where people think there's no risk, right? Arguably the most successful enterprise in human history. 2 billion monthly active users, bigger than Catholicism, bigger than Islam, bigger than communism, bigger than capitalism, bigger than anything that's ever existed. And, you know, great cash gushing, low capex type business. With a lot of runway, because who doesn't want to connect? You know, we just want to connect people, they always like to say. But of course, it's the biggest surveillance operation in U.S. history, in human history. Biggest surveillance operation in human history, and vulnerable as a so-called open platform, right? Vulnerable to all kinds of abuses, such as, oh, I don't know, maybe a foreign government like, oh, I don't know, Russia weaponizing the thing and using it to screw around with the US election. So, there's risk there. And I think Google is the next shoe to drop, by the way. It's the same type of a situation. They own 90% of the online ad market and they think they're untouchable. When they have to testify in Congress, do the top 3 guys go? No, they send an underling, send their lawyers. I mean, it was really, these management teams, Zuckerberg and Sandberg at Facebook and the folks at Google, Larry and Sergey and other guy's name, I forget. They're clueless. They have no idea that they are essentially, like media companies, and they're being recognized as media companies that are allowing themselves to be used and abused by the what are essentially the content creators, right? The users are content creators and they are media companies. But anyway, here's the thing. And Google's really just an ad company, right? But because you can get at it online, there's this media company-like aspect to it where people are kind of creating ad content. So I think it's similar in that way, I'm just saying. And I think that, there's the same kind of risk, and they get called to Congress to testify, and they don't even think it's worth, getting on the private jet and zipping over to Washington. So that's where we are. And I continue to warn people that, stocks like, and even though they don't contain the same kind of risks, Nvidia, Amazon, all the high flyers are really vulnerable to sharp corrections because they're trading at valuations that nobody really understands. And eventually, when things trade at valuations nobody understands, they always wind up trading at a valuation that someone eventually does understand after they get brutally whacked. So I'm not making a prediction, I'm just identifying the risk in these high-flying giant cap tech stocks. And I think that's where I want to leave you. These risks are real. They're there the whole time, just like Cisco. We have a whole video on Cisco in 2000. And, there are things everybody wants to own. Everybody thinks they're wonderful. Everybody loves them. They keep going up. They keep generating return. And then one day, wham, the risk that was there all along becomes widely and well known through some event, like being called to Congress maybe, or something like that, or getting regulated or getting fined or something. And, then people lose money and they get upset and they say, wow, and they're blindsided by it. And I think the problem is that people have not learned to recognize and understand and control risk. And I choose those 3 words very carefully because they correspond to chapters 5, 6, and 7 of The Most Important Thing by Howard Marks, who I think is a pretty smart guy when it comes to talking about risk. And I think if he's really honest, he'll look at that book and say, the most important thing is really risk. Because the funny thing about that book is that he says there's 18 most important things. But the one he talks about most consistently and most often, I believe, really, when you get down to it, is risk. And so I encourage you to look at what you own and look at the history of its valuation and look at the reasonableness of its valuation and ask yourself how vulnerable you are to losing a whole lot of money real fast, the way people did on Facebook in February and again in July, and kind of recently here too. So have a nice day. Learn to understand and control and recognize risk. If we do that in Extreme Value, it costs a lot of money to subscribe to it. And it's definitely not for everyone, but you can go to extremevalueoffer.com if you're interested in that. So I'll leave you there, and thanks again for tuning in. I'm really grateful for all our YouTube subscribers, and I'll try to be more in touch. I haven't been out there lately, but I'll try to get some more videos going in the next few weeks here. Thanks. Bye.
To learn more about extreme value and to get Dan's investment recommendations, please visit stansberryresearch.com/products/extreme-value.